bizarre, silly commentary from investment banks that are simultaneously under investigation by the Department of Justice, labeled a criminal enterprise. How come there's no disclaimer here? Because we have the headline, Gold Prices to Lose Luster Near 2000 by JP Morgan. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And another exciting day in the gold and silver markets, even if the last 12 hours or so it's been in the downward direction. Although, don't worry, I got you covered. Lots of good stuff happening. Let us dig in to some historic things in the gold and silver markets, not the least of which JP Morgan's gold forecast. Although real quick, before we get to that, tonight's episode is sponsored by K2 Gold, who you can see down here. And I had Stephen Swatton on about a week and a half ago. He talked about how they just got a permit to start drilling on their Mojave project. So good update, and it was fun talking with Stephen. So just stay tuned at the end. We'll have an end card that leads you right there if you'd like to find out some more information, especially with gold above $1,900. It's happened so quickly. Although, of course, what fun would a gold rally be without, biased, rather bizarre, silly commentary from investment banks that are simultaneously under investigation by the Department of Justice, labeled a criminal enterprise. How come there's no disclaimer here? Because we have the headline, Gold Prices to Lose Luster Near 2000 by JP Morgan. Okay, so I will do it. No complaining about what anybody else should do. There we go. Yes, I'll move my little head here. JP Morgan's metals desk was a criminal enterprise, U.S. Department of Justice says, before invoking racketeering law and charging 3 of their traders. So maybe theme number 1 of tonight's show is that don't take everything blindly from the firm that has been fined over $30 billion. But let's dig in. Gold surged to a record high on Monday. Look, it got darn close to $2,000 an ounce, already in record territory, although after maintaining a bullish view on gold for over 2.5 years, we believe bullion will likely see one last hurrah before prices turn lower into year end, wrote a group of JP Morgan commodities analysts, not just one. So there's a team, although interesting in this article, a little pit. That I didn't put that in there. That's what is this? Fox Business News saying silver prices poised to outshine gold. I mean, I couldn't imagine such a thing. But anyway, we will continue on, although maybe I'm going to click that one and read it later. Or we'll even take a look at it live here, get the live reaction. But let's dig in because it's about to get quite juicy. In order for gold to hold above $2,000 on a sustained basis, the real yield, or the nominal yield minus the rate of inflation, would need to fall another 75 basis points, from negative 90 basis points to negative 165 basis points. Okay, I was hoping to make a quick show tonight, but where to begin on this one? Clearly, Natasha and her JP Morgan gangster cohorts, they must have gone to Wharton, similar that I did, except I don't think they realized it was complete BS and the same Keynesian economic jargon that bankers and politicians have been using. And I don't think it's any accident to knowingly rip off society for thousands of years at this point. I'm sure the Roman Empire had the equivalent of JP Morgan and their crew. But think about how silly this is. For gold to be able to, now you used to hear like nobody wanted to invest in gold because you want to get some yield and gold's just a metal rock that sits there. Okay, so now can't say that anymore. Now, of course, anyone who's actually measuring anything remotely approaching not the inflation rate, the inflation, as the Austrian economists would point out, the actual inflation of the money supply, and it would be the rate of price increase that really would be what's getting measured. Of course, we know those figures are heavily doctored. And I'll get to a whopper on that one in a second, that if you haven't heard yet, it's just so special that you're going to want to stay tuned. But they're saying that you're already getting negative 90 basis points. So, 0.9%. You're almost losing 1% on your money, but that's not enough. Gold would only rise if you're losing 1.65% on your money. I mean, but it gets better, and we're going to come back to that one. But I mean, I'll pause for a moment, let it sink in. Yeah, that's right. I really said they think gold will only rise if you go from, where did I wonder what quant desk they use to calculate this one. Okay, but here's this is not improbable. I mean, Mnuchin's talking about another trillion in stimulus. Fed's concerned about the outlook. So at least they're acknowledging. I mean, it's not like, winning a lottery ticket for this to hit. While this is not improbable, it looks unlikely given our current U.S. macroeconomic forecasts and policies, which would be what? That we're, according to Jerome Powell, in the midst of the worst man-made created crisis in history, and that he said he couldn't raise interest rates until 2022. So, I mean, even Powell and Trump aren't trying to sell that whopper that the economy is strong anymore. But let's see. So where's the part where they? Oh yeah, here we go. Yeah, I mean, I somehow missed. I got too excited about my silver headline. Here's the. I have all these jokes set up based on this statement, so it was worth it. I appreciate your patience. And you see here, the analysts see the precious metal reaching a high of about 2,000 an ounce amid a move that is not supported by fundamentals. I mean, it's like this is a bubble. I mean, I like how when the Trump administration and the Cftc, who sleeps through the silver and gold markets, yet decided they actually said they popped the Bitcoin bubble, the first one they saw since subprime. Apparently they skipped Donald Trump's campaign where he talked about what a bubble it was until becoming president, and then stating what a virtue that was. Yet no fundamentals. It's just it's just the gold bugs. Crazy Uncle Ned and his gold. I mean, so the fact that from the invention of the Fed in 1913 till 95 years later in 2008, so prior to Lehman, your Fed's balance sheet under 900 billion. Now, here we go. Here's 2011 when the metals are peaking. Fed talks a lot about tightening. Metals get absolutely destroyed as the money supply and debt go vertical. Although, of course, Jerome Powell Bernanke wanted to show what it really means to go vertical. And God only knows what the real amount of money they're printing is. I mean, I know there's no fundamentals supporting a high gold price, but here's even bankster cohort Deutsche Bank, another bank already pled guilty and paid fines to manipulating the gold and silver markets. And if you've never read their trader transcripts, crack yourself open a beer if you enjoy such things, and Google that one sometime. They say Fed's balance sheet could top 20 trillion within a decade. Gee, I guess I shouldn't laugh. I mean, maybe the scary part is I'd take the under on that within a decade, not the amount. I'll say over 20 trillion. 20 trillion. Let's see. Well, if we're already at 7, I'd say that if the Fed still exists in anything remotely similar to current form, I'll say they top that under 5 years. So, but I know there's no fundamentals supporting this crazy gold move. Interesting, though, if you look here on the debt clock, which is now over 26 trillion, I mean, no connection to people buying gold and 26 trillion. Sure, they're completely unconnected. Definitely. Without a doubt. Where that the dollar to gold ratio. Now I can't move my mouse up there and keep the thing, but you see 32,984. Now look to the top middle. This is the year over year increase in M2 money supply divided by the yearly world production of gold. So basically, the rate we're going this year, it would need a $33,000 gold price. But there's definitely not any fundamentals. And of course, the other thing I thought was interesting about this, that 90's not enough. We need to go to a more negative rate. Here is today, you see the bond yield on the safe haven U.S. Treasury at 0.6%. And if the Federal Reserve has an inflation mandate of 2%, and what is that? Negative 1.4. So I guess we would be close. Maybe maybe I should email JP Morgan and let them know. Or if anyone is watching this video who works at JP Morgan, you're welcome to email me at Chris@Arcadia Economics and point out what I might be missing here. Although, again, keep in mind, these are with the U.S. Mickey Mouse CPI inflation numbers. And I told you I had something special tonight, to stay tuned. And, I'm not just BSing here, but this was one of my all-time favorites. This was back in 2013 when you had the debt ceiling was still a thing. I mean, now it's just, I think they canceled it. Well, I'll check on that. All right, debt ceiling. I'm making a note. I wonder if it even still exists. But here, the main proposal that former President Obama, I think the only proposal he came up with for deficit reduction was changing the CPI formula. Obama's version of the chain CPI would save $230 billion over 10 years. So basically, the only plan that anyone in the political establishment could come up with to save a couple of bucks was to commit accounting fraud and screw their senior constituents out of some of the money that they are counting on to retire, which is getting tighter and tighter by the day since the Fed is also running a hyperinflation campaign simultaneously, which really began 12 years ago, longer than that. Once again, I'm on board with JP Morgan. No fundamentals supporting the rising gold price, except perhaps how the yellow line here, which is the price, unlike the silver chart, I mean, it's almost pretty one-to-one. You can see the blue shows how much money is allegedly being added into GLD and SLV, skyrocketing here really in the months since Corona. We'll back that out to the 10-year. You can see this isn't a little hiccup. Look at that one where you had almost 8 million ounces. I mean, it was like in 1 week you had the entire demand of the last decade. I think I got my silver chart coming up there somewhere. But yeah, I can't see any way that any fundamentals supporting the gold price, which was quite volatile yesterday. On Monday, you see the red line gets up to 1980 here and then just kind of spikes down. What's that thing that the department of the JP Morgan guys, spoofing. Yeah, when I don't know what that is. I mean, hopefully I'll be able to find something before this video is done. But then it just falls off a cliff. What's this? Let's call that 40 bucks. Now again, we've seen some moves up like that in an upward direction, in recent weeks. So I don't want to just say like anytime the price is down, that's manipulation. Although, what is a spoof? We'll get to that. Then you see another one here, and fortunately, we don't have to just completely guess at this because I got you covered tonight. Similar in the silver market, although perhaps more pronounced. You see the red line. Kind of. This seems a more natural move up till coincidentally right at the exact same time as gold. I understand they're correlated, but I mean, it's not like gold production went up and it was announced at 11:30 at night Eastern time, and the same with the silver market. Then here, you see that, which is interesting. Again, as a former equity options trader, I'll be happy to state that I think the guys that ran Susquehanna would have thrown me out that afternoon if I'd ever executed an order like that. I mean, we're specifically trained, if you have something to sell, you don't just firebomb it like that. Although, again, all right, Silver Boy, you and your spoofing, what are you talking about? Fortunately, you don't have to take my word for it. Bart Chilton was kind enough to really remove any mystery. And as we will also cover in tonight's show, in case anyone's wondering, I've never been contacted by anyone from the Department of Justice, the CFTC. None of the commissioners ever asked me, hey, Chris, we saw that interview with Bart where he confirmed that our silver investigation was a complete fraud about a decade ago. The Department of Justice is uncovering all of these guilty confessions during the exact period when the silver investigation was going on. And gee, when you talk to Bart, he confirmed that as well. We need to talk to me for. I mean, they got all the evidence, but I mean, they haven't talked to Ted Butler or any of the other people that report these crimes. And one of the things I found fascinating that Bart talked about was how most of the other commissioners started having emails blocked. So that way, when people did send evidence, similar to how Harry Markopolos was warning about Bernie Madoff for years in advance, and the SEC ignored it just so that everyone involved could have a bigger loss. That was avoidable. Although, who was the sole banker for that one? Oh, JP Morgan. Maybe they were busy with Bernie, and that's why they haven't seen some of these gold fundamentals. Or maybe they were watching Ben Bernanke, who once famously said that he doesn't understand gold and doesn't know anybody else who does either. But anyway, let's stay on focus here and hear what Bart had to say.
Again, I appreciate you mentioning the spoofing. Curious, because my understanding of how some of the manipulation has occurred is that, if silver is trading $20.05, there's a lot of stop orders.
And that's right. I was just drinking the water, simultaneously canceling out that pop-up ad. So just saying.
Placed around the $20 handle. So often if the price can get pushed a little bit, then you get a lot of those high frequency algorithms kicking in, and then you'll see a drop with many feeling that people kind of nudging a little are then able to buy lower. Does that sound like a reasonably accurate portrayal to put it in perspective to folks, or would you phrase it differently?
Well, it's a good portrayal, but it's a very good portrayal. But it's actually.
Thank you, Bart. So, nudge a little, thing drops off a cliff. Here it's interesting because you can see just exactly as I asked him. It's too bad it didn't. In fact, I'm sure I could even look up where it even happened at the $20 mark to make that example perfect. But we'll just look at last night, $26. Nudge, then drops off a cliff. I mean, you can go rewind it and hear it again. Then would that be similar to what we saw here? Going through $24 where it dropped down to 22 and change. And so my question is, what would if that is correct, and don't worry, there's more coming. What would the price have otherwise been? If in 2011, when silver was at $49, this had not occurred, which again fits the exact description that Bart just mentioned, what would the price of silver have been? It's unfortunate that the Department of Justice is now almost 2 years after. I mean, their investigation's been going on longer. Edmonds was the first one, and that was about 2 years ago. So here it is, the crime's going on. People are losing or a crime occurred last night because, again, thank you, the kind friend on Twitter who sent this in. I've always been wanting this, and there's some, just open your eyes. It's an app away these days. here is last night's gold chart. And on the bottom, you see the volume. So right there. And then you see the volume. Is this not exactly what Bart just described as spoofing? And again, you know, I'm trying to, just from my background of working at an equity options trading shop where I think it was well trained. I'm not trying to toot my horn, but it's a well-regarded shop that knows what they're doing. And, you know, I would have been thrown out of the place that afternoon if we were trained. You would never execute an order like this, same way you wouldn't have done it in April of 2011 or in September of 2011 when you had a similar gold chart. If you look up that date and see how the price got slaughtered that night, then again, right here, look at the spike in volume. These are not accidents. I mean, I know, you know, the CFTC says a lot of people call and say, well, silver and gold should be higher. Okay, well, there you go. I mean, look at silver. Look at what happens exactly. So you don't need, this is what happens when there's, you know, regular volume, but just coincidentally, you know, and then look at this whopper where it drops over $1 and a pop. And well, to show you, I'm not making this one up. Here is my friend Dawn Giel, who I just autographed a copy of the Big Silver Short. I have spoken with Dawn. She's the CNBC reporter who has been covering this. And here, interesting, well, where do we have there's this great paragraph at the end. It's talking about, the order also finds that Troons learned the trading strategy of spoofing, what Bart was just talking about, from more senior traders at the bank and deployed this strategy with the knowledge and consent of his immediate supervisors. As part of his settlement, Troons has agreed to serve as a cooperating witness. So every confession they got had that same paragraph. Thousands of times, done with the knowledge of their criminal enterprise supervisors. So again, we had the crime occur last night. It's great that, you know, that there's an investigation, but how about this time when if JP Morgan gets fined, rather than sending it to the Treasury so that they can waste it on God knows what is next, how about the money actually goes back to the people who are victims of this crime, losing money? And at least I got a little time on my hands, so I will keep pointing these things out. One last highlight from this Bart clip here. So he talks about spoofing for about 3 minutes and then sums it up with this.
Pennies and nanoseconds. So the difference in your description is that today, when a market moves because of a spoof, it can move a lot more.
So there you go. Inside the CFT's words, don't have to take mine for it. And again, why would, you know, I mean, I know it's fun for everybody to gang up and swing away at the JP Morgan pinata, but, you know, why are we picking on them? I mean, you know, Chris, you're saying this stuff. Do you really have legal basis to say that? Well, I'm not making it up, because here was one of my other favorite highlights from Bart Chilton. So check this one out.
Well, there's some stuff that's out there in the public that I'm not sure everybody, you know, put together. Most people did. I would never, for example, and I won't now, say that, you know, there was a bank, and name it, that held, you know, close to 40% of the silver market at one point. But the news reports, I mean, people surmise it's JP Morgan Chase, and the news reports in the public record showed that when Bear Stearns collapsed.
Look at me trying to contain myself in the videos. I'm like, what did he just say?
That their silver positions got transferred over to JP Morgan. And we, the CFTC, got transferred over to J.P. Morgan.
Let's hear that one more time.
Their silver positions got transferred over to J.P. Morgan.
He's talking about bear silver.
And we, the CFTC, had to approve those positions because those positions, the layman positions, the Bear Stearns positions, the Bear Stearns positions, when they came over, combined with JP's positions, were so large that they violated the position limits on which one trader could hold. So the CFTC had to approve that JP could take on the bear silver positions. So people want to do the math, they can do the math on who had the largest silver. But there was an exception there that we made, and that's in the public record. What's not really looked at too much is that we made that allowance for a time certain, and I forget exactly how long it was, but it was not years. It was, months. Maybe it was 3 months or 6 months, or maybe it was 9 months. I think it was probably 6, but I don't recall. And that allowance was for them to be able to get out of those positions.
Right.
Well, one thing we didn't know right at first is that there was the head silver trader for Bear. He went with the silver positions to JP, and so he's trading at JP. And after this time was coming to an end, the runway which we had given for them to get out of the positions in excess of position limits, they were nowhere close to getting out of them. Matter of fact, at one point, they'd bought even more,
right?
Which was like direct, conflict of what we had in mind.
So that I always thought was a key part. To be clear, he does not say Bear Stearns short position. I think it is widely agreed that Bear Stearns was short. Perhaps Department of Justice could comment and shed some light on that. I think that given a mandate to protect investors, given everything introduced here, I feel that's relevant. And hopefully that will be done soon. I'm trying to warn while people still have the ability to do something financially in regard to this and explain it. But it's interesting because he says right after JP Morgan took over the position, they made it larger. And I wonder if there's, maybe any chance. That here you have was March 14th to 16th, the weekend of the Bear Stearns JP Morgan deal. Amazingly, the Ides of March for these occultists. And also funny that if you look up Ides of March, allegedly the day that Caesar was killed and known as a debt jubilee. And what day did the Federal Reserve, for the first time in almost 50 years, launch an unexpected Sunday night announcement for quantitative easing? March 15th. So quite a historical day. And you see this plummet here. This begins within days of that deal. So when Bart's saying that they're increasing their position, again, people buy silver primarily. I'm not making this up. I think I've sold enough silver, invested in enough silver, talked about silver enough to have some credentials to say this, that main reasons are money printing and systemic chaos. So here's Bear Stearns failing. Here's Lehman failing. Just, it actually rallied a little bit after Lehman, then gets slaughtered again. Here are the first quantitative easing packages are going off. So I wonder if there was a connection with that spoof, that criminal enterprise JP Morgan. Maybe that's why, if you go back, you're on fire today. I had a rough morning, although this is making me feel better. So thank you for being part of my therapy. Maybe JP Morgan doesn't think gold is going to hit 2,000. It's going to back off now because their criminal precious metals desk that's being charged with the RICO statute, which is normally reserved for organized mafia crime, was going to spoof it. Is that possible? now we know, is that where JP Morgan's getting their forecast from? Are they out there spoofing? Well, hopefully we'll find out. The only other thing that I could come up with is that maybe part of that precious metals commodities desk roundtable that just doesn't see any fundamentals. Maybe I got it. Ben Bernanke is there.
But let me just end by saying that nobody really understands.
Ben Bernanke is in the group. And because what did Ben say?
But let me just end by saying that nobody really understands gold prices, and I don't pretend to really understand them either.
Thank you. Mr. Chairman, thank you very much.
I'm going to replay my favorite part. I mean, they're all my favorite parts, but I love how after the man in charge of the world's reserve currency, which for a long time was backed by gold and on a gold standard, ironically, until the London gold pool, a very similar scheme to what we're seeing unravel now, where we're seeing record metal. Geez, even in 1980, we didn't see a run on physical metal like what they're reporting out of the COMEX, but Ben didn't understand it then, probably doesn't understand it now. Maybe he's part of JP Morgan, but I love how after the guy in charge of all this says he's just got no clue, doesn't have any friends who do either, and then they're all like, it's hilarious.
Mr. Chairman, thank you very much. Thank you. Mr. Chairman, thank you very much.
Well, let's do the whole thing again.
Don't pretend to really understand them either.
Thank you. Mr. Chairman, thank you very much.
Yeah, that's funny that you guys are, oh, wait, I'm going to have to pull that one back up. Ben Bernanke on 60 Minutes. I'm making a note. We will have a show about that soon, too. And it'll be a darn good time. And kind of, I mean, I know I'm joking about it now, although I'm not a congressman who is sitting there wasting the money. Again, here you see, this is about 10 years of silver. Gray line is the price going completely down. And here, amazingly, the amount of metal allegedly being added into SLV and the Silver Trust, just going 45-degree angle. Maybe Department of Justice will comment on JP Morgan's thousands of spoofs during this time period, and that has something to do with it. Can see that the price here, people are saying, is silver going too fast. Maybe just finally starting to match the demand. So if silver got up to $50 here and people have just been buying silver since then, I don't know, I'm just like the guy on the silver guy on YouTube, but maybe JP Morgan did not read Bloomberg recently, where even they reported a mighty short squeeze may be building in gold. So it isn't just Chris from Arcadia Economics. Bloomberg reporting how an increase in demand for physical deliveries could trigger a parabolic rise and cause problems for banks. Well, that don't sound good. I mean, and gee, how come nobody warned about this? Or oh, come on, hit the subscribe button and the notification bell. Come on. All right, I'll behave myself. But JP Morgan must not have read this article where details how this is the third major spike in the modern era since the Bretton Woods. And personally, I think JP Morgan spoofing aside, and to be fair, let's give credit to the other banks like Deutsche Bank, Bank of Nova Scotia, HSBC, really a whole host of others that have all committed their own host of felonies. And UBS, too. They were also in the Deutsche Bank trader confessions, where they didn't just confess to spoofing. They bragged about smoking the price and costing a lot of people money. If you're watching this, they probably stole money from you. Certainly for people that are in mining companies and getting the resources we need, made life really hard for them. And hopefully the Department of Justice and CFTC will be on that. But 1980 rally, speculative excesses was born, but blah, blah, blah. But here is different. You need to bear this in mind. as we go down and talk about the relationship with real yields. You didn't have that back then. I believe GLD ETF now has a market cap of 75 billion. Greatest interest, central banks buying, and Longview Economics shows the number of contracts that are being converted into physical deliveries. Gold futures are a handy way to hedge financial risk, but they have never been used to buy bullion on this scale before. I mean, look at the gold deliveries. I mean, if that's what is the supply and demand is driving the price, if that goes vertical, wouldn't that make sense? Here's the silver one, not as extreme, although I don't think they have the July silver deliveries. Why is this happening? This behavior is coming particularly from the group labeled other, worried about protecting their value of their fortunes. They are opting for the perceived safety of physical gold. This creates a specific problem for swap dealers, which are run by the bullion banks that make a market in gold. At present, they are very short gold, meaning they need the price to decline. Is that possibly why JP Morgan or somebody else may have spoofed? And while they were writing articles, well, I guess if you write an article like that, you can drive the price down. You probably look pretty clever, huh? Let's continue. I mean, they're very short, needing the price to decline. Bear Stearns, some think, failed because of their short position. The concern is that we will see something like an old-fashioned bank run, or the remarkable events in the oil price, which saw West Intermediate go negative. That was caused by an excess supply. In the gold market, the fear is of insufficient supply. Bank run occur when a lot of depositors demand their money back. Too many gold futures holders decide to take delivery of physical gold at the same time, and it's likely the swap dealers won't be able to satisfy all of the demands. And let's see, gold price sends signals that other markets take seriously. So, for example, maybe throughout thousands of years of history, people have looked at gold and silver spiking as arousing deeper fears about inflation that could test the confidence of central banks. People really should have no confidence in to begin with. And anyway, you can skim the rest of this for yourself. I think we got the baseball as a diverse article here. But you see, again, mighty short squeeze, even Bloomberg reporting it. And here are the delivery numbers they were looking at. Now I know, let's take a look at, just to put this in perspective, here are the gold futures, which we're just a couple of days away from starting to get an indication of August gold. You can see 14,000, 2,008, 3, then 31,000, which was a lot. Then 2 months ago, it was 55,000. Still a lot of contracts open. I'll be reporting on that later this week. And I'm assuming the JP Morgan Precious Metals desk probably hasn't looked at the silver COT chart, which shows that a collection of 4 traders are short approximately $248 million, which means between $20 and $24. Those guys lost $1 billion, which, you know, in the wrong hands could be an incentive perhaps to spoof and drive the price lower. But we'll leave that aside. Final couple notes here. I found out this glorious bit of news that the CFTC commissioners have Twitter accounts. So feel free to send them this video, or I hope this isn't going to cost me. I am applying for the CFTC Whistleblower Award. I didn't start that yet because I've been busy with some other things like this petition here, which is in the description field below, to ban JP Morgan from trading gold and silver. A nice little recap of some of the more blatant offenses that they have committed. I mean, is there at least enough to say, like, fine, you know, if you want to sell us that whopper about, you know, too big to fail, fine. But can we just say, like, they can't play in this game anymore. Is there enough to support that? So if you would like to support that, you can click on that petition. And any of these videos, feel free to send it. These are people, I'll bet you didn't know the CFTC's budget last time I looked it up, I believe was $55 million. So you're paying their salary, and you know, they're kind of missing all of the evidence or ignoring it. I don't know. I mean, if you ask them, let me know if you get a response. And then our last one here. Oh, yes, we are towards the end of our video tonight. So as always, thank you for watching. And coming your way now is a video we did last week with K2 Gold. And here's just a brief snippet of the summary of K2.
One junior in particular you might well know, Great Bear held it, 2013. It was Chris Taylor that brought it to my attention and said, there's a great property in California, but you're going to have a little bit of a opposition on the environmental side, and the vendor is an unusual guy. It's going to take a while. It did. It took me a year to get the license, but we got the license now. We've got the license and we've got the right to drill, and we'll be the first person to have drilled since the mid-90s.
And you can find out more about K2 Gold in the video coming your way now.